Welcome back to the Crypto's Key Conversation. Hey, in this video, we're going to cover kind of what's going on with all our markets, traditional markets and the crypto market. We're going to take a quick look at what's going on with the Russian invasion of Ukraine. Take a look at some of the inflation and impacts they have on our Valentine's Day and our everyday lives. We're going to take a look at what's happened with the Super Bowl and the crypto ads that took place, kind of give my testimony on how I feel about it. And then we're going to take a look back into the BlockFi settlement with the SEC, and then we're going to start tying into why governments and these agency bodies and certain major world powers are heavily worried about Bitcoin and crypto and what it can do to their control and their power. So we're going to quickly jump into CoinGecko here, and we're currently sitting at a $1.99 trillion market cap, currently up 1%. So looking at the top 10 here, Bitcoin sitting at 42,706, Ethereum sitting at 2,944, Tether, Binance Coin sitting at 403, XRP sitting at 80 cents, Cardano sitting at $1.05, Solana sitting at $96, Terra sitting at 53, and DOT sitting at $18. Looking at the top gainer in the 24-hour period, never heard of that. We have Hedera sitting at 5.9, ICP sitting at 4%, and so on. Coming over here to the Bitcoin Fear and Greed Index. Obviously, we covered this earlier in our earlier video. We're still in this fear range. Yeah, we're close to that that neutral range, but us being in this fear range is just due to a lot of market uncertainty. Okay, you have Jerome Powell and the Fed, you have inflation still going up and being aggressive, and you don't know what they're going to do with their interest rate hikes. Obviously, there was an emergency meeting that's going to be taking place today, so who knows what's going to come out of it. From what I've heard from market analysts, apparently we're still printing money, so they're typically, if we're printing money, they're not necessarily going to raise interest rates. So we could, have, I guess, take a less hawkish or a dovish approach and still wait to the next meeting in mid-March to really start, hiking up their interest rates or whatnot. So I guess it's just a waiting game to see what happens. But there's still a lot of fear and uncertainty in the markets. Coming over here to CNBC, we're looking at S&P 500 is down 0.38%. NASDAQ is down. I guess it's neutral, not necessarily down. Coming over here looking at crypto, you have some green, some red. And then coming over here, this is also playing a toll on the market too, just the uncertainty of what's going on with Russia and the Ukraine and kind of how it's going to affect everything. It says U.S. closes its embassy, and I think it's Kyiv, citing dramatic acceleration of Russian troops. So just the key points here. Secretary of State Antony ordered the U.S. embassy in Ukraine closed and directed embassy staff to relocate to the western part of the country, citing the dramatic acceleration in the buildup of the Russian forces. Russian Foreign Minister Sergei suggested to President Putin on Monday that Moscow take a diplomatic route to procure security guarantees from the West. This comes after U.S. National Security Advisor Jake Sullivan told CNN on Sunday that the Russian attack on Ukraine could happen any day now. So just that uncertainty, it's causing a lot of turmoil within the markets as well, on top of everything else that we're dealing with. So speaking of inflation, I thought this was a great article. It says, expect to pay more for dinner in a dozen roses for the Valentine's Day. So if you come down here, they kind of have like this this chart here. I don't know what's the source, whatever. Oh, the source reproduced by permission from the Balance, which cites the USDA Market News retail data set. So looking at this, it says filet mignons up 154%. You have your hybrid tea rose 22%, diamonds are up 15%, chocolates up 9%, and so on. So clearly inflation is affecting our everyday lives. So, with everything that's going on with inflation, Jerome Powell and the Fed, what's going on with Russia and, potentially invading Ukraine, and just a lot of the uncertainties that's going on within the space, obviously there's going to have some negative impact on the market. And just the uncertainty alone, markets don't like uncertainty. We like to know kind of what's going on. So, these Wall Street investors and big investors can kind of, plan ahead in regards of their investments. Now, there was been a lot of conversation about what happened with the Super Bowl, and we've covered Super Bowl ads prior to the Super Bowl, but obviously we've seen the companies come out. So you have like Crypto.com, FTX Trading, and Coinbase that had ads, and they spent roughly $6.5 million for a 30-second ad slot, right? So when I watched the ads, okay, I felt completely indifferent, especially about Coinbase. So in one point, Let me go ahead and pull it up so, those of you who haven't seen it. So this was the Coinbase ad, right? And I don't know if, how old you people are, but like back when, we would use DVD players on a regular basis, whenever it was kind of like in that like neutral or idle menu, you would have the DVD thing kind of bounce around the monitor. So they put this QR code and it was literally just bouncing around. And I'm telling you right now, when I was at a Super Bowl party, we had people ranging from their high 60s all the way down to being 13 years old. And there was only, out of the 20, 30 plus people that were there was only 3 people that actually knew what was going on with this ad. And it was me, my father-in-law, and my brother-in-law. And that just goes to show you, yes, Coinbase say that, they had 20 million, people scan the QR code within a minute, which crashed the site. But it's like, okay, how many people would you have had, go to that, scan that QR code and go to your site if you had, put like your logo or some sort of information educating all, walks of life of what's going on in the crypto space. So me, for how I felt, quite honestly, I felt like it was pretty innovative. It was kind of cool. But like, if you weren't, up with the times and knew what was going on, you completely missed out. So I feel like they dropped the ball in regards of giving the mass exposure. There was predicted, 117 million people were going to be watching the Super Bowl. And yet you only had 20 million people. Obviously it was in the first minute, but only 20 million people. Imagine how many people you would have had if you actually put some more information on there, which then could increase exposure, not only to the Coinbase platform, but to, digital assets and what the entire crypto space has to offer, because Coinbase has a lot of, digital assets within their platform. So coming over here, if you had scanned that QR code and went to the thing, it allowed you to sign up to get $15 of free Bitcoin. And then you were also opted in the platform's $3 million Bitcoin giveaway, which is kind of cool. But I still think they kind of dropped the ball. I mean, I think it was, in a sense, it was different, but I don't think it was enough for, it being the first time crypto ads being in the Super Bowl. Like, I just didn't think it was enough. I felt like they could have did more. But, obviously that they thought that strategy worked, and Coinbase forced into outages following Super Bowl ad after more traffic than ever encountered. So here's the thing. I've been a Coinbase user since 2017. There's always some sort of outage or whatever. So it's like, I'm not too impressed by, 20 million people dropped the site. It's like, anytime there's high volume of anything, Coinbase tends to have a problem. And I'm not trying to throw shade at Coinbase. I use Coinbase. I love Coinbase, but they got to kind of get it together when it comes to that. But I truly feel like they dropped the ball. Now, the other ads that went about, I wasn't, that impressed about it either. I felt like there was a major opportunity that could have been had, and there should have been like more awareness or education, because there's millions of people out there that are oblivious to the space and that don't know the space, that don't trust the space. So let's find a way to educate them more. So, that's just kind of my sentiment on that, but we're going to move on. So we covered in our past videos this whole BlockFi settlement, and I cover a lot about the SEC versus Ripple case and how, this case is truly going to set precedent. Clearly, the SEC is overstepping, their capabilities, and they're trying to overregulate by enforcement this space, which is only stifling and hindering the innovation and growth within the space. And they're only hurting the so-called investors they're set out to protect throughout this whole process. So them trying to overreach and overregulate, they're not only coming after certain digital assets, they're coming after platforms. And this is a perfect one. They went after BlockFi's, interest earning accounts. So obviously users on this platform would, either stake or leave their digital assets within this platform, and they would earn a certain yield or a certain interest amount on that. But now, they have this settlement of 100 million due to their lending product. And as we know, we've talked about Coinbase, when they came out and said, hey, they're getting ready to start a lending product, the SEC had, sent them a letter saying, hey, we're pretty much going to come after you if you proceed with this. And not only that, you also have, the SEC probing, Gemini and Celsius's platforms in regards of, lending. So clearly, the SEC is coming after everybody. And yes, BlockFi agrees to pay the 100 million in penalties. And from my understanding, if you're a current user on BlockFi and you are getting yield based off of your digital assets, I think you are so-called grandfathered in as for now, and then they're not taking any new users or new accounts. So that's just from my understanding. I would look into it if you're, on BlockFi and you do utilize that platform for that. But it says company also agrees to attempt to bring its business into compliance with the Investment Company Act of 1940 within 60 days. So clearly the SEC isn't out to protect the investors. I mean, quite honestly, based on what they're doing with the SEC versus Ripple stuff, and then just them completely, operating by enforcement. They're regulating by enforcement, which is the complete wrong way to do it, because you're hurting the investors in the process. So us as investors, obviously inflation is eating away at eating away at our dollars. So if we leave it into the bank, we're not earning, not near enough interest to combat inflation. So we're just losing value in our dollars. So if we buy digital assets and stake them or leave them on a platform to earn interest, that's our God-given right. We earn that money. We paid our taxes. So we put whatever rest we have, we allocate it to those, digital assets to earn yield on it. Now, they're coming after all these platforms and trying to shut it all down. It prevents us from earning money on the money we worked hard for. So that's problematic. So this whole crypto space is about taking these central entities, taking their power and lessening it, trying to give more power to the peoples, the consumers, peer-to-peer stuff. So now you got people truly starting to gravitate to DeFi. And we just covered in our past video from yesterday how we were talking about, the SEC is not just going to stop with these centralized entities. They're going to start trying to find a way to come after these DeFi platforms. I don't know how they're going to do it, but they're going to find a way to try to come after these DeFi platforms that are offering these so-called lending products or this certain interest-bearing account. So no one's safe. Not one project safe, not one platform safe. The SEC is coming after everybody. So when it comes to this SEC versus Ripple case, it is highly important that the SEC does not win, because all they're going to do is gain more power to overstep, overregulate this space and try to dominate and stifle the innovation within the space, which can't happen. So I got there was this tweet from Digital Asset Investor, and he's responding to Hester Pierce's, where she said thoughts on the BlockFi settlement, and he had put up this image here. It says, applying the securities regulatory framework has consequences, some of which may be unfortunate. Rather than enforcing transparency around retail crypto lending products, today's settlement may stop them from being offered to retail customers in the U.S. So pretty much completely obliterating retail customers in the United States from even having an opportunity to earn interest on their money, pretty much. It says BlockFi will not be allowed to take in any additional crypto from retail investors until the company has registered a new crypto lending product on a Form S1. Getting an S1 to the point where staff will declare it effective is often a months-long iterative process. When crypto is at issue, the time frame is likely to be longer than it would be for more traditional filings. So like if you are a customer out there and you utilize or you want to utilize BlockFi at this point to earn interest on your stuff, you're going to have to wait until however long this process takes, for them to get their S1 or whatever the case is, and from my understanding, obviously, if you're obviously your grandfather in, you're lucky. I'm one of the ones that signed up for BlockFi to start utilizing that product, but I never really followed through with it. So I don't even think I have the opportunity to do it, which kind of bothers me, because me and my wife work hard for our money. So we want to make our money work for us at the same time. But now we have, the SEC just putting their hands into everything, which they don't even understand what's going on. And they're just stifling, my family's growth and your family's growth and the growth of innovation within our space, which is unacceptable. We invest into this space because we see the opportunity. We see the opportunity to have life-changing wealth and to achieve financial freedom. But now you have the SEC hindering that process. It's unacceptable. Digital Asset Investor says, goodbye lending to U.S. retail customers. Gary Gensler is shutting it down. And it's quite evident. There was an article that came out where he specifically said he is coming after all of the platforms. Simply put, he says, we're going to make sure that all of these platforms are, in his quote, they're going to be regulatory compliant or consumer protection compliant. Everything that the SEC has done has been completely vague, and it's been vague on purpose to where they can continue to come after these exchanges in these digital asset companies and these projects because the verbiage is vague. That's the problem. We need clear, concise regulatory clarity so this space knows how to operate on the right side of the law, standpoint, so they can continue to grow, innovate, and build out their use cases for the entire space. Absolutely. So coming in here, this next part from Stephen Huber is absolutely massive, because it goes into what I'm just talking about, how this vagueness and lack of regulatory clarity is only hurting the entire space, and the SEC is looking absolutely foolish. So he says, Gary the Clown in 2019, I absolutely agree with Hester Pierce. It is inconsistent of the SEC to allow Bitcoin and Ethereum futures, but not an ETF. And this is the 2021 Gary the Clown. He says, I absolutely disagree with Hester Pierce. It is consistent that the SEC allows Bitcoin and Ethereum futures, but no ETF. So let's take a listen in here. Let me go ahead and rewind this.
Commissioner is referencing, but I do think the two agencies have taken different approaches, partly because of their underlying statutes are different in the commodities laws. the exchanges can list something, list a new contract, and they don't, in a sense, don't ask for permission. And in this in the securities law, to do an exchange-traded fund, you kind of have to go knock on the door of the SEC and get permissioned. But underlying that, Bitcoin futures and I think Ethereum futures and so forth will exist, and Bitcoin ETFs have not. And that feels a little inconsistent to me. As an observer, and I'm now in academia, but it feels a little inconsistent. Even though the laws aren't exactly the same, they're quite similar.
No, I mean, I think that's a really good point, and I think, that's part of the reason that I said we should go forward is because you already have the futures markets in place, which help to discipline, again, to provide some of the discipline which my colleagues at the SEC were concerned that the underlying markets had no discipline in them at all, and I think some of that we can get by looking to the futures markets.
So, literally, I mean, just this this confusion within the market, just to leave it at that. It's just the lack of clarity is only hurting the investors that they're set out to protect, because clearly they're just literally talking out of both sides of their mouth at the same time, and just kind of like how we talked about. They're literally just regulating by enforcement, which is completely the wrong way of doing things. And you wonder why people are gravitating to crypto, because not only do you have the SEC, but you also have other media outlets and governments that are trying to criminalize crypto because they can't block or stop blockchain. So they can't stand it. They can't stand that they don't have that power. So let's take a listen into this. This is from Fox News.
There will be consequences for these actions, and they will be severe. We've already started by going after the money funding the illegal occupation. Yesterday, an Ontario court granted our request to freeze the funds from Give, Send, Go for the convoy. Fines for noncompliance will be severe, with a maximum penalty of $100,000.
So keep in mind that truckers raised $10 million on GoFundMe. That's a California company, but Canadian politicians had that effort shut down. Then Give, Send, Go, which is a Delaware company, raised almost the same amount, and Canadian politicians went after that money too. The Attorney General of Ontario successfully got a court order to freeze access to the $8.4 million raised on Give, Send, Go. Those funds were going to an Adopt a Trucker fundraising campaign. It was paying for, quote, housing, water, food, accommodations, and shuttle services for truck drivers in Ottawa. But all of that money has just been stolen by the Canadian government. It's been seized. All of this is pushing people away from government-issued currencies because they're in control of lunatics like the guy you just saw, and they're moving toward cryptocurrencies like Bitcoin. Just like 18-wheelers on bridges, blockchain is pretty tough for the authorities to control. Therefore, here's how you know it's a threat. The crypto guys must be white supremacists. And lo and behold, that's exactly what they're now telling us.
It's an avenue not just to make a lot of money or lose a lot of money, but it's also an avenue for money laundering, and it's also a place where white supremacists apparently are taking options. I mean, it's problematic at best in so many ways.
It's problematic at best. How do people like that get on television? There should be an IQ requirement. But by putting dumb people in the anchor chair, they're perfectly compliant to the people in charge. Crypto is white supremacy. But the hysteria gives...
So, and you wonder why, people are seeing the writing on the wall when it comes to that, the overreaching and centralization of things and, the power they have. Like, what? You wonder why we're gravitating to crypto, especially now people educating themselves on DeFi a lot. For me in particular, like, I'm gonna leave my, digital assets on my ledger or on my, my decentralized wallet on the web, and, send money to, my brothers or my sister or, my friend here or there, or pay for a service. It's like, okay, yeah, I'll still pay my taxes on everything. I understand all that, but it's like, why would I allow you to control and block, what I'm trying to do, whether it's to, raise money for a cause or send money to support somebody or send money to pay for something. You wonder why people are gravitating towards crypto. And it's funny that you have this Ripple thing up here when it's supposed to be XRP, but we know that's all been kind of misconstrued over the years. But I'm going to end on this one. It says, why does Elizabeth Warren hate Bitcoin? For the same reason the exile in China hates Bitcoin. Neither one of them can control it. So just another one. Let's take a listen in.
These authoritarians hate Bitcoin and they hate crypto, and it's for the same reason. Why do they hate Joe Rogan? Because they can't control him. He's not subject to their authoritarian power. Why do they hate Bitcoin? Because they can't control it. It is a system of currency outside of the monopoly control of the U.S. government. And I got to say, as I've addressed, I spoke at a big crypto conference in Austin several months ago, and I said, listen, you need to understand this administration, I believe, is going to go after you and is going to try to destroy you. And by the way, that's a pattern of authoritarians. China, communist China, outlawed Bitcoin for the exact same reason. Why does Elizabeth Warren hate Bitcoin? For the same reason that she in China hates Bitcoin, because neither one of them can control it. And the theme through all of this is the power of freedom to be not subject to the arbitrary whims of those in government power.
The power of freedom. Absolutely. And that's all when we, as especially our small investors, that's why we're investing in this space. We love the innovation. We love what it's doing and the power, the freedom that it yields. That's why we're here. And they can't stand these higher powers and these people that just have these reservations against crypto. They can't stand that we have that ability to gain life-changing wealth, to change the course of our financial lives for our family, to gain the freedom and independence from them. They don't like it, let alone the education we gain from it. The fact that they don't all understand it and they can't control it. That's just a reality. We're so early in this space. We're currently under 2 trillion. We're so early to the party. With all that being said, stay strong out there. Be safe.